Transaction number 6, you buy stock again, but this time on credit. So the two accounts is creditors and trading inventory, as opposed to bank and trading inventory. Creditors, by now you know, falls under liabilities. CLIC says credit your liability if you want it to increase. When I buy on credit, I owe more. Trading inventory, asset, dead, debit expenses, assets and drawings. More inventory means debit your inventory. You have your debit and you've got your credit. Filling in the table, press pause, and once you've filled it in, press play to see if you've got the answer right. You have credited the creditors and debited your trading inventory, debiting what you've bought, crediting the source of the funds. Where did the money come from? Your bank account for number 5 or your creditors for number 6. Now you're going to, at number 7, sell some of that stock. You're going to sell it on credit for 20,000 Rand. The cost price of your stock is 5,000. Remember, you will always mark your stock up. You've got two prices in this transaction, so therefore you've got two transactions. Let's start with the 20,000, the selling price. When I sell on credit, I have got a debtor, a customer who owes me money, therefore he's an asset. I've earned an income called sales. I've sold to my debtor, so the two accounts are sales and debtors. Debtors are assets. Assets fall under debt, so we will debit them if they go up and credit them if they go down. I've got more debtors, so I'll debit the debtor. That sounds similar, doesn't it? I have got more income. CLIC says credit your income if it's going up, and therefore I'll credit sales with 20,000 Rand. Filling that in on the table, once again, you fill it in and then check your answer. You have debited your debtor and credited your sales. If you look at number 4 and 6, you'll see that you credited the creditor. That also sounds the same. So it's another way to remember it. If you credit your creditor, they go up. If you debit your debtor, they go up. The name sounds similar, and that's another way, as I said, to remember it. This 20,000 Rand for transaction 7 was not the only amount. We had another amount, the cost price of 5,000. That stock that we bought at number 5 and 6 went into the inventory account on the debit side, but now it's been sold. So therefore we need to remove it from trading inventory and write it off as an expense. We will no longer get something in the future for it. It isn't money and it will not become money again. It already has. So the two accounts is our trading inventory, which must be taken away and written off as an expense called cost of sales. Debit the asset if it's increasing. It's not increasing, it's decreasing. So credit the asset. You are taking inventory away. You've sold the stock, you've got less stock. Cost of sales is an expense. You debit the expense if it's going up. You've got more cost of sales, more expenses. You've moved the inventory from assets to expenses, like a transfer in a way. Fill in the accounting equation and see if you got the answer right. Credit your inventory, your asset is decreasing. Debit your cost of sales, your expense is increasing. Have a look in the equity column though. More expenses decreases your equity. Transaction number 8. We pay 14,500 Rand to settle our account of 15,000 Rand with our creditor. So we are paying a creditor, and if you look carefully, we are getting 500 Rand discount. How did I get to 500 Rand? We owe our creditor 15,000 Rand, and we're only paying him 14,500. The difference, 500 Rand, is a discount. It's like money in our back pocket for no reason. We haven't paid it, and it's ours to keep. So again, there are two amounts. We are paying 14,500, and we are getting a discount of 500. So when I pay my creditor, it'll be bank and creditors. By now you know bank is an asset that falls under debt with a debit as a plus and a credit as a minus. We are paying our creditor, therefore my bank goes down. Creditors by now you also know is a liability. We credit the creditor. CLIC. Credit the creditor to increase, and therefore debit him to decrease. When you pay him, you owe him less money. So decrease your liability with 14,500. You have a debit and you've got a credit. Now with the discount, we have received a discount. That's an income. I'm still decreasing what I owe my creditor, but I'm earning money or saving money. So I'm going to credit my income because CLIC says credit liabilities, income and capital. For every credit I need a debit. I am debiting my creditor. And if you think about it, I owe him less when he gives me a discount. Can you see I've decreased my creditor's account with a full 15,000 Rand? Some of it was paid out of the bank and the rest was given as a discount to me, so it was an income. Let's go and fill this in on our table. Do the money first, treat it as two separate transactions. Fill it in and see if you got it right. What did you debit and what did you credit? You have credited the bank and you have debited the creditors, decreasing your assets, decreasing your liability. Now for the discount. You have credited your income and debited your creditors, decreasing what you owe them. Our last transaction, very similar, except that we are receiving the money from our debtor as opposed to paying money to our creditor. We receive 19,000 Rand from a debtor to settle his account of 20,000 Rand. So he owes us 20, but he's paying us 19. To settle means to write off, to clear his account. That means we must have given him a discount. The difference between 20,000 and 19,000 is 1,000 Rand. That is the discount. We are receiving 19,000 Rand and we are allowing our debtor a discount of 1,000. So there are two amounts, therefore two transactions. Let's deal with the cash first. I am receiving money from my debtors, so the two accounts are bank and debtors. Both accounts are assets. The asset that is increasing is bank. I am receiving money, so I've got more money. My debtors, however, are decreasing, so therefore I will credit that asset. With the discount, I'm losing money. When I sold to him, I had an income, but he's not giving me all that money, so therefore I've got to cancel some of that income, which means I've got an expense called discount allowed. I must debit my expenses when I have them, and if you look at your debtor's account, he is decreasing his account. When you give him a discount, he owes you less, and you now have an expense. For every credit, you need a debit. Let's fill this in on the accounting equation. Starting with the money first, the 19,000 Rand. You have debited the bank and credited your debtors. Now take the discount in a separate transaction. You have debited the discount, you've debited the expense, discount allowed, and you have again credited your debtors. Now try the DIY exercise on your own and then mark it in the next video with your lecturer.